So I was just asked if you can close on a purchase that needs flood insurance while the government is shut down. This is your host, Ron Wojciechowski for the Black Hole of Real Estate. And there is a way to get this done. Now, the vast majority of insurance policies that have flood insurance, they're backed by the government. And since they're shut down, you can't even get a quote right now. So even though there may not be a storm in there, because the government is shut down, that's over with. So until they reopen the government, you're going to have to seek an alternative to the traditional way that most people get in flood insurance on their properties. And this is going to create a few problems if you don't understand how to work this situation properly. So keep in mind, let's suppose that the government reopens tomorrow. Great. But if there's a named tropical storm in the area, that may also prevent you from getting an insurance policy bound. Now, this would affect people closing this week, next week, a couple weeks later. For as long as the shutdown of the government is in effect, there's going to need to be a workaround. And then you have to add on top of that the possibility that there could be a named tropical storm or other thing that causes the insurance company's lines to shut down. So with that in mind, what do you do next? Well, there is an alternative method for that to obtain flood insurance. And if you have to close, sometimes the least worst option is a pretty good one. So right now, I would expect a deal I'm working right now to have flood insurance somewhere between $350 and $650 for a policy. There are carriers that are not backed by the government guarantees on the flood insurance, so no bailout for them. So you're going to pay more because there's more risk to the insurance company to do it this way. Those policies, I got one this morning for a property that isn't very expensive. It was almost $2,000. So if you can imagine paying an extra $1,200, $1,300 for a policy, but you get to close the deal, you have to ask yourself, is the risk worth the wait? If you need to close on the property and you're going to have it for a while, maybe you're going to live in it, you're not going to remember the $1,000 or $1,200 5 years from now. You know that you got the property and made the deal work. And if you're selling the property, you could participate too. You could split it with the buyer. You could pay the whole thing for the buyer. Maybe you're about to unlock a couple $100,000 in equity. Are you going to let $1,200 get in the way? Maybe not. So there's some logical decision process occurring right now for both sides, whether it's the buyer or the seller. How do we overcome this? And if there's financing involved, you're most likely going to have some insurance in place with the proper limitations, or the lender's going to say, too risky. Now, if you're buying it with cash, you can absolutely self-insure and just hope that nothing bad happens until the government reopens and you have a way to get more traditional insurance on the property. So with this in mind, let's say that you're doing a investment property where there was renovation involved. Perhaps it makes sense to close with the insurance that's available and pay the extra money for it so you can start on renovation sooner, because the time cost of money is also coming into play. And maybe you've got a rental in there where you're making, $400, $500, $600 a month in cash flow. Look, I'm not telling you to give it all up and you should lose it. But if there's money to be made and there's room within it, it's an extra grand. It may not be the difference maker. Maybe you get a reduction in price from the seller, or some help where they pay half of the cost. There's options out there, is what I want to tell you. If you are also doing a renovation, and a lot of people are doing, fix and flips. Some are doing fix and hold. If you're doing a fix and hold and you're using cash, or perhaps, it's very popular to do DSCR loans and things like that. Maybe you're going to get the renovation loan and use the flood insurance. And when it comes time to refi it out, when it's all done, you're going to refinance it anyways. Flip it over to a more traditional insurance. Time that out. I suppose that once the insurance line's open, let's say that you close and then a month later you can get insurance on it. I don't know if you're going to be able to achieve a discount for like a month or two of premium, or if there's some proration, or if you're just out the whole amount of the premium. You're going to have to ask your individual insurance provider what that question, and understand what's going to happen and take place, afterwards. So thinking this through, your deal doesn't have to be dead if you can't get flood insurance. Matter of fact, there's a lot of ways, a lot of remedies to do it. And in this case, it's about $1,200 worth of difference. So whether you eat the cost yourself, maybe the seller pays it for you, maybe you split it in some way, that's a workable situation. If you carry that flood insurance for a time period, whether it's a month or 6 months or even longer, look at that specialized coverage and ask, what would it do to the profitability of that property if it's a rental for you? If it's a renovation, I've mentioned that you can actually just change it somewhere down the road, probably when you do the refinance, into a more permanent loan for the buy and hold. You can just carry it on. I could go on with more examples, but I think you get the point. That when we're in situations that are beyond our control, and a government shutdown is absolutely beyond our control, in the same way that a hurricane is beyond our control, do you want to delay deals? As a buyer, do you want to wait? You can. On the seller side, do you want to risk it? You can have all of your money except for $1,000 if you just cough it up and pay the difference so the buyer can close and unlock the rest of your equity and close it and move on and remove further risk for other government stuff or hurricanes happening, or just the fact you got carrying costs every month. You're probably insuring it in some way. You probably have some other taxes. And who knows? I mean, if there's a structure, they might have utilities. There's a number of things that could go right or wrong for you, but they all cost money every single month. And for a lot of investors, sometimes the closure and receiving some money to move on to the next deal is the way to go. It's not the last resort that you think it is. It just involves a little bit of money. So you can close even though the government is shut down. And we keep hearing, oh, you can't get insurance. Well, you can't get that kind of insurance. And that's the point. When you are told no, to me, it just means not now, or seek a different way. And now we've got one. I hope this helps you. If you're an agent or you're buying or selling this month and you're not sure about this, and this video did not solve the whole problem, call me, message me. I'm going to help and be in the space of contribution as much as possible. But I've heard this a couple of times this past week, and you go down the rabbit hole a little bit. And rather than just say, okay, I guess you can't close, seek that solution and find that. If you got a comment or another resource that would help us in addition to this and give us some more options, I would love to hear about that. And we could talk about that on our next show. In the meantime, this is Ron Wojciechowski for the Black Hole of Real Estate. Happy shopping.